What I'm observing today in the market is that we're not really thinking about the scale-up yet. We're thinking about the early innovation stages yet. So what I observe in the market, or we as a company, is that incubators are popping up everywhere. The occasional corporate venture fund is finally being funded. And lots of accelerator programs are being started, either own ones, partnership programs, or corporates jumping onto sort of some of the global famous accelerator programs. But what we see is that these are not really driving sufficient innovation, right? They're not really scaling it up yet. It's only a prototype we're building, basically, initial minimal viable product, and we're not really scaling up the business as we should have it. Now, I talked a couple of days ago with Gregor. Gregor is one of the head of one of the corporate venture funds, or actually venture client units, as he calls it. And he's come up with really interesting and fascinating ways how to integrate a startup and really pull it through to the core of the corporate world and transform the corporate core. But I found that that's a real exception. Just yesterday, I had lunch with Richie. Richie is CEO of a quite interesting corporate venture firm, corporate venture startup. And in spite of early successes after the first 12, 18 months, he was really sharing his experience in terms of what he would do differently if he had a second venture to be started in the corporate world, differently in terms of how to measure the startup, different how he would communicate with the stakeholders, different in how to really manage the whole business. And to me, that's rather the norm, that there's real difficulties in how to really scale these things up. And in a way, it's a little bit like moving from dating and the early honeymoon phase into a more mature relationship, right? I'm married for 13 years, and probably can share a few experiences from that and parallels from that, and many of you might share these challenges. Now, if we think about what the main challenges are, the first one is really about values and culture. They are not the same, right? And if you think about marriage, probably it's the same issue you'll face. How are we going to raise kids? How are we thinking about the world? What type of school do we want to give them to? What type of religious direction do we want to give the kids? That's something if we're not aligned, we really struggle. A mutual strategy, where do we want to live? You know? How do we want to share who spends time with kids? Again, very interesting topic also in the corporate and startup world. How are we really integrating us as a family? How do we building sort of the right rules to do that? Again, very much similarities in that. Last but not least, about resources and financials. What type of rules do we have? Who owns the money? How do we spend it? And how do we evaluate whether we're successful and whether we're happy? And roles and responsibilities. How do we solve that magic function from getting the dirty dishes into the dishwasher? And likewise, in the corporate and startup world, how do we actually split the different roles that we have? Let's look into some of those. Values and culture. On the family life, if we're a young family, if I'm trying to make a career early on, I'm probably trying to jump jobs every 2 years or raise the career ladder within a big corporation, move places very, very quickly. And I need to make decisions very quickly with family, right? And it doesn't really work well if I'm trying to build growth and my wife is trying to build a stable family life and a stable home. And it's very much to talk about the obvious that these two worlds of driving real fast growth while trying to build stability in the corporate world are somehow not really compatible. And the key part of that is really making faster decisions. And I can only encourage all the corporates, do take faster decisions. Don't take ages to find the right staffing model in terms of which people to move into. Don't take ages for funding decisions. Don't take ages for M&A decisions. It's a real hurdle. Stop the governance nightmare. In family life, if I have the need after a stressful week to spend time with friends, to do sports, to read a book, I probably don't want to explain why I'm doing certain things day in and day out again, but I need sort of the trust that my governance is also a good one and that only a minimal set of family governance really works and set the right surroundings. And likewise, we see a lot of startups struggling in being scaled up in the way that corporates try to combine and sort of control the startup world in the classical way that they do it. And deregulate. There's tons of things that require regulation, absolutely. You know, data security is one for them. But we also found that too many rules are being applied on startups when we are in the process of moving from a prototype to a scaled-up solution, and that's hindering the teams, that it's hindering growth, and that's alienating people. Mutual strategy. Sort out your priorities. I think there's probably two big directions in which startups and corporates try to act. One is, I leave it on a green field and I really want to basically grow with the equity, build a completely new business. The other is I really want to use startups to transform the core of my business, right? The famous speedboat that really should pull the tanker ahead. And it's two different approaches that probably need to be taken. And I see lots of corporates, and I applaud them for having that trust in that, who do lots of activities, where every business unit tries some digital activities and collaborates with startups, where a corporate venture fund is being built, as well as some incubators are being set up, as well as participation in some accelerator program is being made. But they're not prioritized, they're not coordinated, and we're losing a lot of momentum to scale this up, right? It's all grassroots approaches that are not really managed in a useful way and don't allow a business to grow and transform the core of that corporate. Play to the strength of your partner. We see lots of hesitations. When finally startups have gone through sort of the initial accelerator program, have confirmed the initial proof of concept, if you want, there's still a lot of not invented here syndrome, right? The engineers sort of are almost addressed in their pride that they haven't come up with that idea, probably. But on the other hand, the engineers probably are 20 on that specific field. They have a certain few million euros of sort of development money, while a startup is being much more significantly funded, has much bigger staff, and should really be leveraged for that strength that they have, rather than sort of struggling with the not invented here syndrome. Integration, one of the really topics, if you do the research, well, not a lot has happened when you think about the M&A space. If you analyze in the industry that I'm working in, primarily retail and consumer goods, there's hardly any digital M&A taking place, even globally. There's a few famous deals, but not so much. And the way how these deals work is also very different, right? Classical PMI would work very much on, yes, a growth story, but also integrating cost synergies very early on, right? Leveraging all the SG&A overheads to be integrated. And that's not how M&A or PMIs should work in the digital world. There's a whole set of different rules to be applied here. Likewise, like having a child at some point in your family will change the way how the rules of your family react, right? You'll behave differently. You'll set up different rules in your family life. And likewise, that'll be needed in the digital world, in the M&A space. And fight that not invented here syndrome, right? You've probably come a lot of thoughts from your kids, if you have some, that you don't quite buy into. And probably your kids also don't buy into all of the ideas that you have. And that really needs a cultural bridge of more integration between teams, much better integration between sort of a greenfield ivory tower startup or accelerator incubator solution and the startup world. Resources and financials. I'm not sure how many of you have signed up a marriage contract up front to solve a lot of the conditions, but what we find that in the corporate versus startup world, truly aligning the financial perspective is really critical and often omitted. To give you one or two examples, with one client, they invested early on in a really promising startup, but a minority stake, and what they did, classical mistake probably, but they sort of collaborated and grew the business, but never fixed sort of the financial alignment up front. So basically, with every euro of revenue they put into that minority stake, they make the whole company obviously more valuable and however drive up the valuation of that company. And if they ever want to get into a bigger stake, they pay double basically. And likewise, if you want to have a successful entrepreneur, he doesn't work with classical sort of levels and contracts how you would work, right? He wants an equity stake. He wants, and definitely the majority equity stake. He's probably not willing to give away any equity, by the way. If you hire a venture capital manager, you definitely need to sort of make him work in the way a classical venture capital firm would work, and probably allow him to earn more than the CEO. Totally different worlds that most of the corporates, the smaller you get in size, the more difficult they find these things to manage. A really important topic for me is corporates or accelerators overall still, in many cases, give funding and they give desks. And that's not what AAA startups need anymore, right? If we're talking about the type of startups that are sitting up here, these are serial entrepreneurs, these are global leaders in their field, and they need different things to scale up their business. They need access to your products. They need access to your distribution channels. And you need to trust them to open up that core capability and core asset that you have to letting these players access these channels, work with your products, work with your distribution channels particularly. Otherwise, they'll never scale up. They don't need money. They'll find that anywhere else. And they definitely don't need desks only. And here's one more thought. Exclusivity probably won't work for those guys. Don't think about doing an exclusive deal with them. Probably not even some sort of IP protection will work, depending on the industry you're in, obviously. And probably they won't be willing to give out a single % of equity for that. And at least there's occasions and situations where you need to think about very different ways of sort of playing with these and believing in the acceleration and the scale-up that can happen with the startup world here. Roles and responsibilities. I think it's also really important to understand when collaborating that startups should be and have to be really laser-focused on one solution and one topic and one problem. That's totally opposite to what the corporate world is sort of used to. We're used to, in the corporate world, manage a really, really broad spectrum of activities with all the complexity that comes with it, and really appreciating that laser focus and not imposing the complexity of the corporate world on the startup really is key. And as indicated before, know what you want, right? Know what you expect from the role of the startup or the community of startups you want to work with. Is it actually something where you say, this is an investment vehicle for me to build up a new business unit that I haven't been in before, a completely new business field? Or is it something that really should pull ahead the core tanker and transform the core of the business? And these two approaches will be very different, and probably there's different shades of gray in between, but many companies sort of play with both sides and are not really focused on one or the other. What about the startup side, however? There's two sides of the partnership, right? I can only recommend, and we've heard that up and down this morning, focus on the product and the customer. That's really the key role of the startup that needs to be there. Don't overpromise. The corporate world takes time to decide on these cases and probably needs a pretty positive case, but it's also pretty brutal in a short-term, quarterly-driven perspective in terms of when they are willing to, how long they're willing to support it and when they need to pull the plug of some kind. And so not overpromising is actually really, really key. Keep it simple. Try to fight the complexity, if you want, that the corporate world imposes. Otherwise, with the small team that you are as a startup, you'll never be able to sort of really, really make an impact and scale up that individual solution. And probably one more topic, no accelerator hopping. We're seeing a lot of players that sort of look for the next financing round only and jump from accelerator to accelerator almost. Probably not, that's not the AAA ones that we're having on stage here today, but that's really something we think is really important. So that's a few learnings from how we observe in the market in terms of how corporates and startups are collaborating or what their main challenges are. And what we believe is that it's not only about the early innovation stage and continue doing that early innovation stage, continue investing in smart accelerator programs and smart incubator programs and smart venturing capital setups. But do think about the next step. Do think about how you scale this up, how you scale it up as equity for the startup, how you scale it up for yourself with the core of your business. And I think only that will give us the opportunity to really capture part of the value that has been shown earlier this morning. Thanks a lot.